afternoon. It's a great pleasure to be back here exactly 1 year ago. I think, David, if you remember, we had already State of the Union in 2018, and this year, second time in a row, so totally reliable compared to the US government. On time, we didn't move it, and I'm really thrilled to have, I have to say, the A-team of the blockchain and crypto asset industry on stage. Really a fantastic combination of thought leaders in the enterprise blockchain business, in the blockchain solution business, in the crypto exchange, decentralized. So we have a really great variety of experts and thought leadership here on stage. Before we go into reflecting what happened in 2018, because it happened a lot, I would say, and then also what we expect maybe coming the next 12 months before we see each other again in 12 months. I would like to start with a short introduction round. Leanne, if you want to start short introducing yourself, what you do, and then we continue with Eric and David.
Hello. Oh, good. There you go. I can hear my own voice. That's a bit scary this time of the afternoon. My name's Leanne Kemp. I'm the founder and CEO of Everledger, a company that uses blockchain to provide a platform of provenance in the traceability of precious gems, metals, and minerals.
Eric?
Hi, everyone. I'm Eric Voorhees, and I am the founder and CEO of ShapeShift, which is a digital asset exchange. So basically what that means is it's a way to convert one kind of digital asset like Bitcoin into another digital asset like Ethereum. We don't touch fiat at all, so we're purely natively digital, and we've been running for about 5 years almost.
David?
I'm David Rutter. I'm the founder and CEO of R3, which is an enterprise blockchain company. Our core product is Corda, and we have an enterprise version, Corda Enterprise. And we started about 4.5 years ago, mostly focusing on the financial industry, but we're a platform company that is now in many different industries, insurance and telecoms and airlines and other things. And we're a 200-person company, but we punch above our weight through a massive partner network. We have over 200 partners at this point. So,
Right.
And I'm Brian Behlendorf. I'm Executive Director, or you could say CEO, of Hyperledger, which is an open source project hosted at the Linux Foundation. It's a consortium of over 300 different partners building a family of related blockchain technologies, frameworks, toolkits to go out and build all sorts of different kind of blockchain business networks.
Very good. So, Leanne, looking back at 2018, so what are the key takeaways for you, and how this will evolve in 2019? So what do you think will happen this year?
So I feel guilty about my carbon footprint, I must say. There's been an incredible amount of travel for us. We tripled the size of our team in a 14-month period. And we realised the architecture beyond just a B2B traceability. So it went from B to B and then B to C. We're in the hands of consumers now have the ability to choose a diamond based on their consumer preference, the consciousness that they bring towards the purchasing decision. Yeah. And we're very proud as a team to enable that to now be a part of a retail network in more than one country. So we have this established in retail outlets in Hong Kong, mainland China, the US, Australia, and the UK. And in the first quarter of this year, we're really looking at saying maybe ASEAN is an incredibly important part of the world as well. So Taiwan, Indonesia, Malaysia, Thailand is another part of our focus. From a technology standpoint, look, I'm delighted. I've been in this space since 2014, which is actually quite a lot of time. My background's been in software engineering, and because I'd worked behind a keyboard most of my life, and I wrote the very first iteration of Everledger in October 2014. Brian and I, of course, have had a long-standing relationship with our work together between Everledger and Hyperledger. And I must say, a part of the tooling is now matured enough into a scope of works where I can imagine the future possible, and I have the tools within the frameworks and within many different actually applications, whether that be R3 as well in the Corda application. I feel like I'm spoiled for choice when it comes to engineering, which we have not had until probably about the last 6 months on the releases that are out in market. So I think I might need to get back behind the keyboard again, so we'll see how it goes.
I remember our first discussion already in 2015 about digital assets. And now this year, I think will be a year also that assets will be tokenized.
Look, I'm incredibly excited about that. I think a lot of assets have already understood the value of tokenization. Diamonds is the one commodity that's yet to have true financial asset applications wrapped around it. Doesn't have a futures market yet, and hasn't realised ETFs. And Everledger is perfectly poised to be a foundational element of what that future might bring. So yeah, we're sitting quite pragmatic about where we sit in the world, but we're also removed from the hype. You know, it's very real for us to take the incumbent responsibility upon ourselves within our culture, that we are building something that is important, not for actually the team that we have today or the company that we're building today, but it's the next state of generation work that we're really building towards. So,
Brian, how do you see the whole enterprise business blockchain evolved over the last 12 months and coming up? Because there are major changes, I think, already happening.
In 2018 was really a year of professionalization, I'd say. We have a number of platforms now within Hyperledger and obviously outside as well that have reached the point where you can run a production business network on them and realize value, right? And so this past year, we've had both Hyperledger Fabric and Hyperledger Sawtooth have been post-production 1.0 release, right? Meaning they've been fixing bugs, addressing scalability, and being used in networks that such as the Diamond supply chain network that Everledger has established, but in other examples like a trade finance network in China between CITIC Bank, China Minsheng Bank, and the People's Bank of China, currently doing a billion renminbi a day in letters of credit extension. Some of the other technologies that are starting to mature in Hyperledger are Hyperledger Indy, which is a digital identity platform that will go 1.0 either this quarter or next, which is already being trialed by the Dutch government, by the Canadian government. Kiva is working with the government of Sierra Leone to set it up as a digital identity and KYC platform. So there's a lot of momentum and excitement, and there's a couple of directories out there tracking deployments of these technologies and what platforms they're on, and they list dozens of production networks on top of Fabric now, and it's great to have, like a sign for me was when I had a cold email and then a phone call from a research scientist at NASA saying, I've been chartered with implementing the next generation air traffic control system with all these new requirements around privacy and confidentiality of the planes flying over us, but still verifiability. And we're thinking about deploying it on a blockchain, and here's Fabric, and it seems to work great for us. So, you know, it's at that point where, that inflection point where there's more things going on than you can keep track of, even if it's your full-time job, that we're at now, and that makes it pretty exciting.
Good. David, you share the same view on that we are at an inflection point from enterprise blockchain perspective?
Yeah, so 2018 was a big year. Before I get started, first off, I want to thank everybody for hanging around. I know in the last session, and I want to just say I was thrilled to see Leanne. You mentioned we both started in 2014,
we did,
and your energy actually inspired me.
Good work, Granddad. Good work.
Oh, thanks. But you know, some of the stuff you were doing really got me thinking about it, and I don't blame you for your technology choice because Corda wasn't launched back then. But in 2018, we launched Corda Enterprise, and the pace of change has been really incredible. And one of the things I was thinking about, because 2018 was such a blur, but we're trying to be a global company, as I mentioned in the opening. And I was in India in March, and to be honest, there was nothing going on Corda. It was, you know, Fabric and the Ethereum craze and all that sort of stuff. And I was back there in October, and when we look at today, less than a year later, there's more Corda-trained engineers in India. We're working with every SI. We're working, we have a live application in India and about 10 more in the queue. So 2018 was really exciting, and we saw our first apps get into production. But there's a lot more. I think 2019 is really the year in production, and we keep talking about, you know, when it's first going to show up in the annual report of a BNP or a Natixis, and that's still maybe a couple years off. But I think everybody believes in the technology now, so that's a big change from a year ago.
So Eric, how was 2018? I think you're in the whole Bitcoin top business for years and going through up and down. So what are the key takeaways for you, and how do you see, you know, if you look at the crystal ball, what will happen in 2019?
I think in 2018, judging by the condemnations of Paul Krugman and Niril Rubini, I'd say we're doing pretty well. So we'll keep that up, and the more negative we can get from them, I think that's a good sign that we're actually changing something. 2018 was probably best described as the hangover of 2017. So 2017, I think every crypto company saw, between 1,000 and 10,000% growth, and that was largely a bubble, as crypto's gone through a few times. So 2018 was really that bubble popping, and the quality projects starting to struggle through realizing, like, okay, now we need to make sure that our organization is actually catching up to the hype. And so we spent a lot of the year just working on building our team of people. So actually building a organization of individuals. And this is very much not related to technology or crypto, but just company building. And that's been a struggle to learn those skills, sort of like while we're moving. We also had to deal a lot with regulation throughout the year. So we moved from a world where we weren't doing any kind of KYC whatsoever to one where we've implemented one of the leading compliance programs in the industry. That was ideologically very difficult for me to swallow, but I felt like at the size we were getting to, we needed to do that for prudency reasons. So it's been a struggle of a year, but that's okay. As crypto grows, we will keep building an interesting business, and we're excited to see what this next year will bring.
Mm-hmm. And so, Brian, if I listen to you, the last year and this year is very much push into production, and what I see is that it's pretty much in the vertical in the industry. Do you see also that we are now going cross industry, that that the traditional lines of industry will blur, and we more talk about themes and ecosystem around the real estate, the mobility, health, and industry players across different industries try to bring services together that are not digital bundled today, and help the institutional clients, retail clients to get better services and services that they don't get today. Do you see that looking at your projects, or is it too early to say?
It's too early to be able to cite a lot of examples of that happening just yet. But we certainly see people setting up supply chain traceability programs who realize, well, this is now a great database of who the good actors are in this network, and that can serve a KYC function, right? Or the opposite. Let's set up a trade finance network. Oh, by the way, this is also something we can wire into the logistics network, because part of trade finance and settlement through is, when the product actually gets to the end of the chain, right? So we kind of need to be talking to the customs authorities and to the shippers and that sort of thing. And this, the idea is there'll be lots of these different blockchain networks out there, but I don't think those networks differentiate based on use case. I think they differentiate based on business community, right? Here's a set of stakeholders who do a lot of business with each other, and there's a whole lot of different functions they do. Maybe they even have a healthcare kind of component to what they do, right? So, I mean, we've started out with special interest groups in healthcare and trade finance, the public sector, and in social impact. But we definitely see conversations that weave through those different communities, because ultimately, I think these transactions do flow very, very seamlessly across them. It's another reason to invest, by the way, in interoperability protocols.
Yeah, exactly.
So we've got something called Quilt, which is an implementation of the Interledger protocol, a standard defined at the W3C.
Because David, I think my experience is, if you look at blockchain, pretty much if you use this in an existing industry, it's all about efficiency gains. And then the question is, when you put this in production, to diminish not too early your existing profit pool. And the more I speak to banking executives, they're excited about cross-selling, opportunity access to customer that they don't have. Do you see also this new ecosystem discussion coming up, or is it real estate, for example, that telco, utility, insurance companies are working with the bank together to provide a service? If you buy a house, that it comes already in as a digital bundle, for example.
So I think the new technologies, distributed ledger and blockchain technologies, reduce friction, and as we know, can disrupt the way assets are traded and settled, which I think then creates all sorts of new opportunities, some of them that we can't even imagine. But I think that we're seeing that start to play out already. And I also very much agree with Brian's point about interoperability, which is going to be very important. For us, we started with what we call the Corda network, which we announced about 2 or 3 weeks ago, which is just to make sure that all the different business network operators that use Corda can frictionlessly and freely exchange cash and other assets. And we think that's important because we can't possibly imagine in some of the industries we're solving problems like trade and trade finance, how all these parties are going to, play together in the future. So, I think the simple answer is that it creates all sorts of new opportunities for us, and I can't wait to see how it plays out.
Now, for me, I think the key takeaways is you have to continue digitalizing open banking, API banking point of view, your core. But I think you have to look outside. Where are potential business partners that you can team up? Because for me, the blockchain technology is the glue, the workflow cross-enterprise to connect different businesses. And that's something that I think will be a challenge going forward for banks or financial institutions. And what do you think? Because I think digital asset is not only linked to one industry that you're in.
Yeah, look, for me, it's interesting. I look back and I think we had a double-barrel challenge. The first is to move a 500-year-old industry that was completely opaque and have an admission in the mirror that what they're currently doing isn't good enough for themselves and for consumers. And so therefore transparency, regardless of the technology layer, was an important construct of industry at large. And gladfully, look, in 2014, I remember being across the industry talking about transparency and blockchain and technology and rambling off. People would look at me nearly cross-eyed and thought I was a crazy person or a witch that should be burnt at the stake. And now I stand here with some pride, to be honest with you, because we've had the titans of industry not only admit that transparency should be a core operating system of the industry at large, but that also blockchain plays an interesting and nearly an integral role in delivering that with fairness to the world. So I look back upon that, but talking about taking a platform of provenance, enabling transparency, giving the story to consumers, I'm sort of seeing something a little bit further. The fact that we are awakening to the challenge that we've set upon ourselves for the next generation in circular economy, this new economic modelling, that it's not good enough for manufacturers just to imagine a first-time use, that, if I buy a bottle of milk today, that the cost of the waste I burden as a consumer, is there a different model that we can set upon? And should we have a responsibility across the supply chain to know where stuff goes, and that there should be a life beyond the first life? And this is really, for me, where I want to take Everledger, where I'm taking my team, and I'm convinced that, one of the statements that I made more recently was, why? Why couldn't Tiffany realise the value from Hewlett-Packard? With all the e-waste that exists in the world, and we know now out of the World Economic Forum last week that we have enough e-waste in the world today that's equivalent to every single Boeing aeroplane jet ever built on the planet is as much waste as we have. So if we can strip back that and actually create complementary supply chains where these strange bedfellows, like who would have thought that maybe Hewlett-Packard could be one of the greatest suppliers to Tiffany's?
But I think before I move to Eric about decentralized, because ShapeShift is one of the leading decentralized exchanges, is that also linked to a business model change? Because we used to centralizing platforms over the last 20 years. With Internet 2.0, try to bring platforms to aggregate, bring the demand and supply together. With Web3 discussion, this is more on the decentralized. Do you think that is also coming into the enterprise business, or is it just a very philosophical discussion?
beyond philosophical discussion. I mean, if I want a philosophical discussion, I would have read a Zeus, the cat sat on the mat book. But the reality is, for me, I've been recently appointed as the Chief Entrepreneur for Queensland under the Minister for Innovation. So I have a government office. And when we think about Queensland and Australia, I mean, it's one of the greatest nations in the world, as far as I'm concerned. We have custodianship of the Great Barrier Reef. It's a responsibility that we hold very dearly in the Daintree. We're also one of the most proudest mining countries in the world when it talks to cobalt and lithium and even diamonds. And this is not a fairy tale of what is about to happen. The reality is it has to happen, because the amount of items we're consuming and raw materials outstrips our consumerism by 2 times. So we have to move to new models, go beyond digging dirt and think about urban mining. It's really not about the technology. It's about, countries should not be just measured on GDP and export. We can export cows to China and they'll pay a good price, but there's got to be more about this economic modelling. And as we start to build a system of fairness and trust, of course, blockchain plays a significant role in this.
Okay. Quickly.
Now I feel like I'm ranting, right?
No.
Beer, like honestly.
I think the discussion
Can I join the rant just for a few minutes, which is, economists have called these externalities, things that cannot be accounted for in the traditional demand-supply curve kind of classic economics kind of model, right? We have the technology now to trace a lot of these externalities. You could argue that the Sustainable Development Goals, right, the 260 different metrics by which we hope to measure by 2030, have we improved anything about the state of the world? Those are metrics of a lot of things that are considered externalities by the classic system. Slave labor in diamond mines or on fishing boats, emissions of carbon and other horrible things. And I think blockchain technology applied to the supply chains of the world, possibly also to certifications, the SDG around like education of girls in countries, right? If we had an educational history system that used a public ledger, distributed ledger to track your graduation, others, right? I think every one of these SDGs can be a metric we get to 5 decimal points by deploying blockchain technology out there in the world. And so that's my co-rant on that. That's what drives a lot of it.
We'll come back to you in a minute, because I want to give Eric a chance to explain, why is it called decentralized exchange? What is the difference to the traditional exchange business? Why are you calling yourself or ShapeShift as one of the leading decentralized exchanges?
So we're actually not a decentralized exchange. We are a centralized exchange, but where we share properties with decentralized exchanges is that we're non-custodial. Okay. So the model that we built was one in which we don't take custody of user funds whatsoever. That provides the protection of people holding their own assets, which is something that the financial world is very unfamiliar with. The idea that individuals would just possess their own assets and not have to trust another party with them. I think is one of the core principles of good cryptocurrency. So while we're not decentralized, we maintain that property. And I do want to say that it's nice to hear this social and environmental comments here. I hope that people can become more monetarily conscious as well. The reason that I'm interested in this stuff is that every year, 2 or 3% of everyone's wealth in here is stolen from them through inflation. This is something that just goes on in the background that people have just accepted for hundreds of years. I don't think is acceptable, and so this is why myself and many people in the cryptocurrency industry are trying to reinvent money from the ground up, not just to reinvent banking services on traditional fiat, but to actually reinvent currency itself in a transparent way, a borderless way, in a way that can't be stolen from the masses of humanity.
Wow. That's a big job.
It's a big jump, and I think we have 2 extremes. I think we have, Eric is consistent for years on those positions. I think watching him for years. The key question that I have is, and I want to challenge you, Brian, because I think I agree with you. I think both R3 and also with Hyperledger, with your partners, you're building new networks, combining different industries, especially in the supply chain, if you look at TradeShift. But, are these models still, from my perspective, and I want to challenge that, is very centralized, that 2 parties try to get the most benefit out of that. Do you think that there's a pushback into yeah, the next generation of corporates. That means there's a network, that there is no dominant player, and that enables, I think, a majority of the industry to join and share data and enough business to have a significant critical mass of. So I think the discussion that I have in the blockchain community is on the other side, the enterprise blockchain community, embracing existing models, but try to utilize the new technology as much as possible. And then I have the Web 3.0 community saying, yes, we need you, but it means also the way how we work together, and pushing back out that the next generation of Facebook and Google should not come up with the new technology. And love to hear both David and Brian's your point on that, because that's been discussed in a very intense way, I have to say, that if you listen to those communities.
Yeah, sometimes the tension between the consortia ledger world and the cryptocurrency world can feel like the tension that we've played out for the last 20 years between the open source world and the free software world, right? Where there was kind of a position out here which many people feel is valid, and I have a lot of sympathy for it. I understand where it comes from, especially the aftermath of the 2008 crisis and the real crisis of confidence of institutions of any sort, right? Like, we should all be somewhat skeptical of that. And that was very analogous to Richard Stallman's experience in the mid-'80s of having his research project taken away from him and committing himself from that point forward to only working on software licensed under a license that would never see his rights to that disappear, right? And in the open source world, we always said if Richard Stallman didn't exist, we would have had to invent him because he had served as a reasonable goalpost for us, expanded the Overton window, I guess is perhaps the term to use, to say maybe there's something better that we can do today than turn over whole industries to a centralized Facebook style or PayPal style or other centralized entity, and where there is a real risk of that, because the technology choices absent blockchain, absent distributed ledger, are client server. And that architecture drives a market architecture of a central provider providing a whole lot of central services to everybody else as vassals on their estate, right? And that's what we want to avoid. And the only reason you'd want that is you're already number one, or you're gunning to be number one, or your venture capitalist wants you to be number one, right, at that core center. But everybody else is incented to cooperate to keep that from happening. And that's the kind of that's my view of what consortia ledgers are all about. That's my view of why these enterprise blockchain platforms have a value. And even when you have a governing entity, they're more like a referee on a football field rather than the next Facebook. And we'll have competition between them. We'll probably won't just have one. That's why these multiple ledgers out there are good to have, because competition will breed lower fees and innovation and all that kind of stuff. And we'll do transactions across, and it'll all just be great.
So, David, what's your view on? Do we see new business model emerging, or is that like 20 years ago? From Internet 1.0 to 2.0 is still 5 years to go, or?
So, well, first off, I want to make just a point about how, Leanne, you spoke about how we can make a big difference in the world, and you talked about the inefficiencies, and I hear that from the blockchain community all the time. So why don't we make a motion now to end proof of work once and for all, and save all those trees and all the power that's wasted, and I think that would be the biggest step we could take forward if we want to evangelize about those types of things. But one of the interesting things, I think that we have a tendency to look at this centralized, decentralized thing all the wrong way, okay? So until blockchain and technologies like Corda and other technologies empowered it, centralized business networks had no choice but to be centralized and depend on a party to somewhat coordinate it. But if you think about someone that's selling a product, teak from Indonesia to an American consumer, and you look at all those steps, you can empower all the parties. The inefficiencies exist primarily because we haven't had this type of technology that can actually suit the business case. So I think we kind of have to turn it on its head, and I think it's very exciting. We have a big deal with Finastra on something called LenderCom, and you think about the syndicated loan markets and agent banks and the issuers and the participants, many of who don't know each other, but they depend on, one central source to disseminate all of that information. And we now have the technology to empower everyone to kind of take control of their own part of that business with great confidence that what they see is what others see.
Fair point. Then if you as the first mover many years now in the blockchain business, so what do you think are the, we all talk about at the end adoption in the enterprise business. What do you think has to change to even increase that adoption and make it more, from a volume perspective, much higher penetration than we talk about today?
So, look, we have this incredible Olympian in Australia that won a gold medal at the Winter Olympics, which was quite astounding. And he won because he was not the fastest in the race, but he was so articulate in knowing where he could run in his race. He came across the line with a gold medal. He was the last man standing. And it's not necessarily first to markets, it's first to scale. And for me, my background before I started Everledger in 2014, 2015 was in and around the diamond and jewellery industry. So I already had some background context on top of my technical knowledge as to what the industry was going through in its own tectonic plate shift. The monopolies that existed were no longer monopolies. We had synthetic diamonds entering into the supply chain that were fraudulently marked. We had issues with paper certification. There are significance of challenges within that industry that it was very clear that the dynamics of the industry, the tooling that the industry had, could no longer solve for these challenges. And the challenges of the industry combined together were greater than the challenges that they set upon themselves within their own industries. So Everledger entered into the market. We did one thing right, just one thing. And it wasn't the technology, and it wasn't the team, and it wasn't the funding. It was just the timing. In that we knew and understood, because I'd worked in RFID in the mid-90s, so now I'm giving away my age, Rutter. And I was deeply involved in not only where and how that technology could transform supply chains, but also at a silicon chip and inlay level. And I thought that RFID would be a game changer in 5 years. So I was absolutely on the pony, ready to get this thing off the ground, only to build a business with 40 engineers and 5 years later thinking, this is going to take a lot longer and I'm not hanging around for this. And still today, RFID has not reached the maturity. So for me, I understood, and I spent the time over 6 months recognising the timing of industry. And I applaud David. I honestly do, because I think the guy is brave, because he entered into a market where he had to convince a whole bunch of banks and financial institutions to come in a room and play nicely together where they've never played in a sandpit together before. The diamond industry is different. In the year 2000, after Leonardo DiCaprio's Blood Diamond movies, the United Nations said enough, and they created the Kimberley process, which meant all of the layers of industry, NGOs, public-private partnerships, corporations, had to get in the room 2 times a year, every year for 15 years, and they were learnt to how to communicate together. What they didn't have was a digital language to transform this network. They were still tablets, stone tablets and bits of paper, and we transform that. So I think there's certain industries that just don't have the operating system, and nor do they have the language, the construction around the consortium, the appreciation, and even the politeness to know how to conduct themselves well in a cooperation. So,
but more and more in the fishing industry, you have all these treaties now about where one can fish, where one can't. I'm really highly encouraged by all this parallel stuff happening outside the blockchain space that is about business cooperation. Government as regulator, sometimes as facilitator at other times, but a lot of NGO involvement too, whether it's digital identities, whether it's all these different spaces where it seems like the timing is right for a lot of blockchain technology.
David, do you think this too? Or is there other levers to drive adoption?
What I just wanted to add is that, people talked about the hype cycle and, is it a good thing or is it a bad thing? And no matter how, it's not about the coins, and I don't mean that in a negative way, or the price of Bitcoin or Ethereum, but it just kind of got at the very senior levels of most companies, folks to think about how they could work together share the expense and create efficiencies around non-differentiating and non-proprietary services that each kind of party in a supply chain or a business network are doing, and they're not differentiating in any way, and how they could work collaboratively. But we would be remiss not to say it's not just about the blockchain technologies, but it's also advancements in big data and cloud and data processing speeds and everything that open, and IoT, of course, which is a very big part of the blockchain story of the future. How they've all come together to make a big difference.
And Eric, for your business, one of the maybe driver for adoption is regulation. The regulator is heavily impacting the crypto asset business. Do you see a change right now? The US regulator, the Swiss regulator is pushing everybody into regulated security and asset token, that you have to follow existing security laws. Is that something that we are more moving into more a controlled environment, or how do you see the whole crypto asset business is evolving?
I think there's a fundamental tension between a technology that has no concept of borders or where someone is born or how old they are or what they do as their profession, and the ability for them to use financial tools built on that platform, versus a regulatory system that cares very much about where someone is born. And that tension is not going to go away anytime soon. Something that is really bothers me is that due to various regulations in the US, we as a company are not able to serve the entire nation of Iran. 80 million people, one of the biggest countries in the world, we are not able to engage with them. 99.9% of those people are very good people, and we are coercively prohibited from working with them because some politicians think that they're bad people. I think there's something fundamentally wrong with that, and so what's exciting here is that crypto is starting to challenge those preconceptions and is actually bringing in questions of whether money and finance, like speech, should actually have a concept of borders or not. And I think in 20 years, when this experiment has played out, it'll be very clear that it shouldn't.
Humorously on that, it was pointed out to us that there's a cryptocurrency lab at the National Bank of Iran who look at Bitcoin, look at Ethereum. They've also been looking at Fabric, Hyperledger Fabric, as a basis for doing a national real.
Not Corda. We're not looking at Corda.
And we can't do anything, but it's open to like talk with them or engage them. It's open source software, though. But I mean, this global, the fact that open source technology is global, the fact that a lot of the networks that have been set up around the cryptocurrencies are global, is a really key enabling thing. In China, when I first got into this position, I was worried. One of my first foreign trips at Hyperledger was to China, to a blockchain event. And there were people talking about Ethereum, but they were also talking about, we're going to build China Ledger, which is a full stack, bottoms up, of all China technology. And enable our businesses here. And it was kind of this Belt and Road kind of mentality, right? And we spent a lot of time. We have both team members of mine on the ground in Hong Kong and China, as well as a licensing strategy and a membership strategy that pulled them in. And so Baidu, Tencent, Ali, Huawei are all members of Hyperledger and the Linux Foundation. Because with open source software, we had been able, I think, to cross the great firewall, so to speak, and get collaboration going. And that was essential, I think, in this space, so that we can get supply chains that start in Shenzhen and end up in San Francisco.
And David, I think R3 is involved in many exchange project. Exchange, that means building digital asset platforms.
Yeah.
So the exchanges see that their business is, their business is in the middle of a big change. And maybe you can share a little bit more. How do you think that whole exchange? Because you're many years in the financial service industry, and,
right.
and the trading business will be heavily impacted because we will see totally a list of new asset classes be emerging through these new platforms at the end.
Yeah, and it might be from 34 years and all the scars that I can't think of things the way the way Eric looks at them. And I notoriously have no interest in cryptocurrencies. I've never believed them. I don't believe they have a future, and that's my view. However, the tokenization of real assets is really beginning to take off in a big way. Not just the global exchanges, but every central bank in the world, everyone that's every financial institution that's involved in in money, but also the tokenization of assets. And so I think that the future is really bright there. And it's interesting, we talk about digital banking and blockchain. The blockchain technologies have a real high probability of defining what banking is and what it isn't. So a lot of things that we need banks for today, we won't need in the future with these technologies. And I think that custodians and big exchanges are waking up to that and becoming proactive about trying to really understand and embrace the technology.
So do you think that we see a year of custody for digital asset this year, or is it too early to say?
Look, in the diamond industry, I don't think so. I think it's beyond 2020. I do think that consumer-facing applications of trust is important, or building the network of the network. So certainly you'll see some of that coming out of Everledger in the scope of the next 2 to 3 quarters, where we have had counterfeit goods or problems in fraud on very large open networks that are trading billions of dollars in diamonds and jewellery. I won't talk about those names, but you can probably guess them. There's only 4 in the world, really. So I think the network of the networks when it comes to trust, where they can't get to the sort of the lower end. But certainly for us in the diamond industry, we have to realise a better way to understand the pricing of diamonds in a more transparent manner. And at the moment, that really resides within a selected network of a few. And if we can get that truly distributed, then I think we're actually going to see the needle change on diamonds quite dramatically.
So Brian, if we meet again, hopefully a year from now, what do you think? What did we achieve? What is the topic that you think will be the breakthrough for 2019? Well, 2022.
So this year we'll see continued growth and professionalization in this space. I mean, we have a developer certification program that we've just launched. We'll be certifying the cloud providers as well. All the major public clouds now offer blockchain as a service with Fabric and others available. But making sure that people can launch a network on one and be able to provision hosts from another cloud provider is just part of making sure that these things don't become single vendor traps, that sort of thing. So getting that rolled out will be a key for us. Continued kind of growth in the portfolio of different projects at Hyperledger is what we're looking at, and getting it to be more understood and accepted as a standard part of the developer kind of suite of tools that you have to go and solve any problem out there. And how to manage that at scale is a big question.
And then R3 is embracing different new technology, quantum or IoT, or do you think it's just blockchain?
Well, we're going to stick to our knitting. I mean, we have a pretty ambitious plan to build, the operating system for distributed ledgers across industries. But I think when we look, when we're here next year, I think the big difference will be there'll be a lot more in production. There'll be more proof. The way the human mind works, it's a lot easier when there's tangible examples of these things. And so it's going to be a really big year. And I think we will begin to look at providing additional tooling and what we call kind of mid-stack software components to help empower our top-of-stack partners.
So you both are not afraid of all the scalability discussion. I think you both did a DTC volume test.
Well, that could be careful. There's cause trouble.
Change Healthcare has gone on record by talking about a deployment they've done of Fabric for health insurance claims routing that does 50 million transactions a day.
I recommend everyone read the DTC study results. It was done by Accenture, an independent party.
Okay, but I think what we are saying, large trading volume should be going forward, not a challenge anymore.
Not a challenge.
Yeah,
not a challenge for any of today's use cases, and Visa won't switch to it tomorrow. But for everything else, that's not the barrier.
Next year, though.
Look, I think, the diamond industry, gemstones and metals and minerals, has a rainbow of requirements. It's an industry in its own right that boasts itself in the tens to hundreds of millions. What I would like to see is not only Rutter flirting with Kemp on maybe R3 and Quarter, but actually for me, it's interesting to take a look at the functional elements that exist across these, these core infrastructure plays. And potentially, we know that supply chain finance within the diamond industry is a $4 billion shortfall. It's a significant problem. We cannot have diamond tiers even have a depository account, let alone enable collateral-based loans. Is there a way we can challenge ourselves this year in 2019 put the boys in the room with the girls and see what we can come up with an interoperability to actually layer in. Platform of Provenance exists across Hyperledger, but I just wonder if there's financial tooling that we can start to give birth to and see if we can make this sing for 2020.
Let's do it.
So last comment from your side, Eric. So are we moving back to $20,000 per Bitcoin, or are we?
So always got to be a question about the price. Yeah, I mean, Bitcoin will hit $1 million. Bitcoin is the first
Can I
time.
bet you $1 million
Can you
on
tell us
that
when?
right now?
I don't
Right
know
now.
when. I don't know when, but people thought
Before I get to a nursing home, please.
people had similar feelings of doubt and skepticism back in 2011 when we thought it would get to $1,000. That was totally preposterous. But what we have here is a global ledger that has been running for 10 years without a single hiccup, and which allows the entire world's financial system to be built on a new foundation. There are 21 million of the units, so you don't have to do much math to realize that as that ascends into dominance across the world, it'll be worth vastly more than it is today, but it's a very rocky and crazy ride that most people don't have the stomach for.
Okay, so thank you so much all for all the insight and prediction, and hope we see each other again next year. And please give them a big round of applause, and thank you so much.
Thank you.